Good afternoon. This is Bill Biederman from the Allendale Trading Desk. It's June 2nd, and it is Wednesday. Fairly quiet day for the most part. Corn did close in July at $3.48.5, down 5.5 cents. That's 10.5 lower for the week. Basically on the perception that China just is not showing up with the purchases that we've been factoring into the market over the last few weeks. A little disappointing to the market. Crop conditions also showing very good numbers at 76% versus 70% last year. So with ideal weather right now, certainly not a bullish factor, that's for sure. The economy is still a negative factor also as investors are deleveraging in overseas markets. And that's falling over into our markets too. 350 support today in July did fail, and now we're going to see selling up against the 350 to 355 on any kind of rallies that will be contained there. In the bean market, 932.5. That was actually up 0.5 cent today, 5 cents lower for the week. Hopes of China buying have been providing support because the Argentine-Chinese meetings this week just have not been able to resolve their bean oil quality disputes. Firm basis down at the Gulf has also provided some support and some hopes that maybe China is buying. That has spilled over into the interior on speculation that there'd be a shortage this year. But reality is that ending stocks at 190 million bushel is no shortage. There will be plenty of beans coming after this planting season is wrapped up, and we'll see the potential for a 350 million bushel carryover this fall, according to USDA. Brazil is now the main supplier to the world, so at this point rallies are still being capped, but good support at 930 has held. If that gets taken out, we'll probably see a move down towards 914, which is our objective on our short positions, and 960 resistance will probably contain rallies for right now. In the wheat market, we closed at 442.5. That was down 8.25. Wheat led the way today, 15 cents lower for the week, basically because world prices remain down around the 440 level, and we were just well overpriced relative to that. Also, a weak cash market developing out the western wheat belt where harvest has started. And basis as much as $1 under the board tells us that the futures market is just too high. Old support at 356 on the July contract was taken out, and that is going to become new resistance on the chart. In the cattle market, we closed the August at 90.70. That's 107 higher for the day and 150 higher for the week. Cash is trading firm at $94. There's offers this afternoon between 95 and 96. The show list seems to be tightening up a little bit, and we've got good support on the chart at 88.50 and resistance up around $91. The hog market closed today at 82.75. That was down 90 for the day, down about 5 cents for the week, so very little change for the week. We're looking for $1 to $2 breaks to be buying this market. We feel pretty comfortable with it. The support in the market is $81 and resistance is up around 85.80. The dollar this afternoon is trading at 86.85 at the time of this recording. That's 13 higher for the day and about 30 higher for the week. Continued support on the European woes, but basically consolidating to see if what's going to happen here in the longer term with Europe, if they can stabilize. The range on the chart seems to be locked in between 85.50 and 87.65. In the crude oil market today, we're trading right now at 85.17. That's $1.27 higher in the August contract, about unchanged for the week. The oil spill is certainly looked at in the long term as bullish, as it will probably result in regulations that will limit expanding production. However, the short-term situation is bearish. It's just a demoralizing situation that's causing greater economic stress here on U.S. shores. Support in that market is at $70, resistance is at 77, and then at 84. This is Bill Biederman. We invite you to give us a call. We'd love to talk to you at 800-2-MARKET. That's 262-7538. Our website is allendale-inc.com.